The Sensex today crossed the 19,000 mark for the first time in almost 15 months, raising over 200 points right ahead of a cabinet meeting in which more economic reforms are expected to be taken up. Realty Bank and power stocks were the best performers as Sensex riding on buoyant hopes nudged peak 20K. After a great rally, the index closed the day at a shade over 19,065 points. And it was not the buses that was in good chairs ahead of today's cabinet meet. The cabinet meeting is expected to see more reform measures being announced. The cabinet could approve bills that would raise FDI in insurance and pension sector. Now the Indian rupee continues to extend its winning streak and hit fresh 5.5-month high today by breaking below 52 to $1. What we are projecting there, the rupee has gained in the past 1 month on the back of government reforms. And clearly the market in a buoyant move with this cabinet meeting today. My colleague Mayur is with us, getting us the very latest on this crucial cabinet meeting, which is going to take place at about 4:30 p.m. We're going to cut across and get the latest from there. Mayur, a big thrust. We heard the finance minister speaking. A big thrust for reforms, of course, reflecting in the markets.
Absolutely. And the interesting thing is that the government looks like undertaking the reform agenda with no stones unturned. The issues in question right now, at least two of these issues need to be ratified by the legislature, need legislative ratification before they can be implemented. These are FDI in insurance and opening up of the country's pension sector. The government knows that it is in political minority in Rajya Sabha. Despite that, the government is trying an all-out effort to give this reform push, the reform measures, the last push, as we may say it. In fact, I was talking to sources in the finance ministry and they say that as far as the real impact on the economy are concerned, these are measures that are far more relevant than even FDI in retail, because FDI in retail in terms of the real capital inflows that it will bring in is nothing in comparison to the kind of capital inflows that opening up of the insurance and pension sectors are likely to get in. For instance, Berkshire itself, one of the world's biggest insurance players, is waiting anxiously to enter the Indian market, and they are waiting with budget of $8 to $10 billion worth of investment, which they want to deploy within weeks of the sector getting open to the insurance sector. So that is the kind of impact that opening up of the insurance and the pension sectors are concerned. So definitely an important day as far as the government is concerned, an important day as far as the industry is concerned. The industry has already given a thumbs up to the government's intent.
Right.
Remember, the industry does take into account the fact that these are decisions that cannot be done without legislative ratification. But despite that, the very fact that the government is going to propose these measures in the cabinet today has been received with a thumbs up by the industry.
All right, stay on with us, Mayur, because the industrialists one side, the market one side giving a thumbs up, but also clearly political partners of the government not going to be very happy with that move. But let's just put it in perspective on what's happening outside the political spectrum. Let's put the strong showing of the markets over the government's continuing reform push. Let's cut across. My colleague Rukmani and video wall giving us the full perspective on what the markets are looking like today. Over to you, Rukmani.
Thanks very much, Preeti. Well, in about 30 minutes from now, the government cabinet will be meeting, taking up a whole host of issues, something that the markets have been looking forward to. High on the agenda is a hike in FDI and cap on the insurance sector from 26 to 49%. This is something that the sector has been waiting for a very long time. Starved for funds, really. Introduction of 26% FDI in pension sector is also extremely crucial and will really deepen the pension sector. We'll talk a little bit more in detail about that. Let's quickly look at some of the other issues which are on the agenda. There is also, of course, the amendment in the Forward Contract Regulation Act, which will empower the regulator of the Forward Markets Commission give them more autonomy. There is also the operationalization of infrastructure development funds, which will really enable long-term borrowings for infrastructure projects. Proposal for upgrading the Gaya, Kochi, Lucknow and Varanasi airports in keeping with the government's first thrust to reforms, where they talked about reforms in the civil aviation sector. Let's talk a little bit more about insurance. The FDI, really very crucial, something which the insurance sector has been waiting for a very long time. Insurance players locally might actually sell out to the foreign players if they get an opportunity, if this actually happens. Remember, this is a sector which has been waiting to break even for years now, ever since the market was liberalized, and yet that has not happened. The more mature players coming in will ensure that the volume and the depth in the insurance markets will actually double, which is now currently pegged at $66 billion. Another benefit of foreign funds coming into the insurance sector is that that money will find its way into the Indian equity markets, will deepen the equity markets in terms of volume as well, and really buoy the markets once again. Remember, these announcements, including that of opening up the pension sector, come at a time when the markets, the economy are facing a lot of gloom and doom, not just locally but also internationally. Locally, pension funds are something that the government has been trying to manage. It is a huge liability on the government's exchequer, servicing that. The government is really in desperate need of funds. If foreign players come in, there will be better risk allocation for these funds. Perhaps you and I would get better returns on our pensions. That is something that could happen if foreign players come in. There is, of course, also better management of this huge corpus that right now rests with the government. So this is something which is really being awaited. Of course, all this is not without opposition. There are those in favor and there are those against these reforms. The government really has to face a lot of opposition. The Congress and NCP, of course, in favor of these reforms. They know it is now or never. The Congress government is really gearing up for the second thrust in reforms. And there are those that are against which include the AIADMK, the BJP, the TMC. They are not in favor of these reforms. The left front, they have made their stance very clear. So going forward, it seems that the government is dead serious about making these reforms happen, because it's now or never for the government. I mean, it has been accused of policy paralysis. It has been shackled by coalition compulsions. This is a huge opportunity for the government to break away from that image. It remains to be seen whether it seizes that opportunity. Back to you in the studio.
Well, you're right there, Rukmani Vishwanath, getting us the very latest, breaking it down for our viewers there. At one front, the government not left with many options. They had to go for this thrust, but they have to also walk that very tightrope between the economy on one hand and political partners on the other. So let's bring in at this point of time our political editor Javed Ansari standing by, going to give us political perspective on what this move could mean. We also, of course, have with us Mayur Jha, who's been getting us the very latest, where the industry, the economy perspective there. Javed, let me come to you on this. Politically speaking, this is a rather tight rope and a very bold move by the government, because if you look at it, the TMC is against it, and even something like a Samajwadi Party, which has been hand-holding the government outside the alliance, is also against this move. So a rather bold and a brave move by the government.
Well, indeed it is. It signals a change of course, a departure from the past. The muddleness, the lack of clarity of the past has now given way to a certain, they are now aware of the roadmap ahead, and they want to go ahead regardless of the opposition from within and outside. It marks a new boldness. Earlier they were looking over their shoulder, constantly looking at Mamata Banerjee and other allies. Now they've decided that this is the road ahead and they will go ahead. As far as Samajwadi Party is concerned, they do believe that while Samajwadi Party will make all the noise that it wants to, but when push comes to shove, it is not in the Samajwadi Party's interest, or for that matter, even the DMK's interest, to pull the plug on this government and ensure that it is defeated on the floor of the parliament.
Javed, one very quick question. For this reforms to go ahead, it does need to be ratified by the BJP, doesn't it?
Well, it needs to be ratified by parliament, and for that they need the support of the BJP, because in the Raj Sabha they are in a minority. In the Lok Sabha they may just be able to scrape through, but in the Raj Sabha they will need the help of the BJP. The BJP had earlier in May indicated that they would support FDI in pension. Now it remains to be seen that given this charged political atmosphere, whether the BJP will walk the talk and be true to its word, because a lot of the polemics have changed, and the BJP, the Gujarat elections have been announced, so the BJP might not want to bail the government out at this juncture.
Stay on with us. Our political editor Javed Ansari getting us the very latest, the political implication of this reform that the government is pushing. But let's also get an economic perspective, and for that with us is Mayur Jha standing by, reporting on the story. Mayur, at this point of time, of course, political implications, keeping in mind the government is in minority, it would also need to get these reforms ratified on the floor of the parliament. We don't know if this will actually see the light of day. But in principle, the government giving out all the right messages to the industry, to the economy, because everyone had lost faith in the way the government was dealing with reforms, and a complete policy paralysis was in the picture where India was concerned.
Absolutely, Preeti. In fact, market watchers are already saying that this should best be called the Chidambaram effect. Ever since Mr. Chidambaram has taken charge of the finance ministry of the country, there has been some kind of a perceptional turnaround. Even today's thumbs up, today market in fact rallied over 19,000 points, and that's a performance markets have not given in the last 18 months or so. That rally was on the sheer intent. The markets does incorporate this thing in this rally, that these are not final decisions. These decisions need the legislative ratification to be implemented. Despite that, the markets have given a thumbs up at this point in time to the sheer intent. As far as the real economic consideration is also concerned, Preeti, the real economic impact will be much more of these measures rather than opening up the FDI in retail, because FDI in retail, as per government's own estimates, will not bring in more than $5 to $6 billion, that too over the next 1 year or so. But the opening of insurance sector in a matter of 2 or 3 weeks will bring in the government huge $15 billion, about $8 to $10 billion coming in just from one player, that being Berkshire.
Exactly.
So the real economic impact is much higher in case of these reforms than in case of FDI in retail. Also, there is the political side to it. The government knows that March is going to be the last full budget of this government, because after that the government will be on a constant election mode. So the government needs money to fund some of its social sector programs, which cannot be done without these big bang reforms.
Exactly. Maybe we're going to keep coming back to you, because this crucial cabinet scheduled for 4:30 p.m. All eyes trained and trust headlines today to get you the very latest. Let's take a quick closing question from our political editor Javed Ansari. Javed, very quickly right now, they say P. Chidambaram has had the Midas touch where the current portfolio of finance that he is holding. How much is attributed to this?
Well, certainly Mr. P. Chidambaram has provided the impetus. This move, to be fair, was first made by Mr. Pranab Mukherjee last May, but following objections from the allies, principally Trinamool Congress, the government backed out. But now, ever since Mr. P. Chidambaram has taken over as finance minister, he's pushing the pedal. He's got his foot down on the pedal, and he believes that the government should go forward, regardless of regardless of the opposition from its allies, because they've done their number crunching and they realize that the allies may create a noise, but they will not pull the plug on this government.
All right, Javed, stay on with us. We will keep coming back to you for more on this. But for now, we quickly thank you, gentlemen. Mayur Shekharja getting us the very latest. Javed Ansari there, 4:30 is that crucial cabinet meet. All eyes trained on that and crossed headlines today to get you the very latest.